Welcome to the DARTS Allowable Revenue Identification Wizard video tutorial. This is Commodity History and Post-Production Operations, the fourth installment of the DARTS Allowable Revenue Identification Wizard tutorial video series, which covers commodity history and post-production operations that may or may not be eligible for inclusion in the WFRP crop insurance program. Once we have entered all 5 years of our tax return data, we are asked, what commodities have you purchased or purchased for resale in the past 5 years? For the purposes of this example, cattle, stocker and feeder variety, corn, cut flowers, grapes, and finally walnuts. After you have selected the commodities you have produced, click the Next button and proceed to the next screen. Have you produced any commodities not covered by the WFRP program but are included in your tax return for the last 5 years? For this example, we are going to select yes, but if you have not produced commodities that are not covered by WFRP, then select no and proceed to the next screen. Since we have selected yes, the wizard presents us with the uninsured commodity revenue adjustments. Here, for each year, we will insert the revenue and costs associated with the commodities not covered with the crop insurance program. For example, say we sold livestock for $6,500 in 2011 and $8,000 in 2013. We will enter these under the respective year column and next to the adjustment value on line 2 for sales of livestock, produce, grains, and other products you raised. This is part of the process to adjust your farming or ranching operations gross revenue for coverage under the WFRP program. When you have completed entering all adjustments for your operation, hit the Next button and proceed to the post-production operations. Do you conduct any post-harvest processing activities? These do not include market readiness operations, which are the minimum actions required that take place either in the field or in a close proximity to the field to remove the commodity from the field and make it market ready. Remember, if you have any questions about the terms or do not know for sure if you are answering correctly, press F1 to be taken to the help page for that screen. Click the answer that best applies to your operation, followed by the Next button. For this example, we're going to select yes. If you selected yes, you will be asked to which of your commodities you perform any of these activities. If you have crops which are sold as a processed form such as raisins, prunes, or dried tobacco, they are an exception to the post-harvest activities covered under the WFRP program, so you won't need to highlight them on this page. We are going to select cut flowers and walnuts. Once you have highlighted the appropriate commodities, click Next and you will be asked if you package any of your crops in the field during harvest. Again, we are going to select yes for this example. Clicking yes will prompt you to select which of the commodities you pack. In this example, we are only going to select cut flowers, but multiple commodities can be selected. After hitting Next, you are taken to the Field Pack and Post-Harvest Expenses worksheet. Expense data is entered starting with the first year of your 5 years of tax data. Here we are entering data for 2009. You can click here to find the information that the IRS has published regarding allocation guidelines for which expenses are eligible for insurance under the WFRP program. If you would like a detailed explanation of the Field Pack expense adjustments or the other post-harvest expenses, you can click the Explain This link next to the column headers. As always, hitting the F1 key will also bring you to the Help menu. The commodity name is listed on the left side, and related expense data is entered on the right. In our example, the producer had $12,000 worth of expenses related to packing cut flowers. Because these expenses are not covered under the WFRP program, the wizard will use this worksheet to make the appropriate adjustments to determine your allowable revenue. For a more detailed explanation of how to determine allowable labor expenses, click the underlined labor hired. Under Other Post-Harvest Expenses, our producer hired a worker for $1,005 to operate a cold storage facility used during the packing process. This is not an allowable expense and therefore must be reported. Continue through this page, entering any adjustments that you may have. At the end of each column, there is a space for other expenses that can be edited by clicking the Detail button. This button will only become active if you entered information associated with post-production activities in the Other Expense detail for your tax forms in the Tax Return section of DARTS. Again, if you need more explanation for each of the line items, click the Explain This link at the top of the column. In our example, our producer's expenses were the same for each of the 5 years, so we will continue through to address value-added marketing activities. Do your operations tax returns reflect any expenses from marketing activities? If so, select Yes, and the wizard will take you to the Marketing Activity Expenditures worksheet. Here, for each year, you can type in how much of each expenditure was used for marketing activities. DARTS can deduct these amounts from the allowable revenue calculation. This concludes the 4th installment of the DARTS Allowable Revenue Identification Wizard tutorial video series. To continue the tutorial, please select our next video titled DARTS Allowable Revenue Identification Wizard Video 5, Special Case Adjustments and Finishing Up. All tutorial videos can be accessed on the DARTS website at www.agriLogicConsulting.com/darts or on YouTube.